Alright, special upload. I've been asked to make a video about trading options, and I guess I'll show you guys how to trade options in ETRADE, which is the platform I use. And I'll do it in a simple way, but also a more complete way. So here we go. So here's the simple way. So you go trading options, and then you can type a symbol. Let's say Apple. As example. So we can see the price is 124.61 and the bid and ask. The ask is slightly larger than the bid, like you expect to. You got large volumes. And here's you choose the strategy. You can do a call, put, or some more advanced ones. I recommend you get good with the call and put before you consider the rest. So let's say we want to do a call. And there are actions. You have 4 actions. You can buy open, sell open, buy close, sell close. And basically you start the option with a open trade, and then when the time comes or when you want to take profits, you do the close action to the same action that you did. So if you buy open, then you need to sell close. If you sell open, you need to buy close. It's like a reciprocal. And here's the quantity. Note that this is one contract. One contract involves 100 shares of the stock, so be careful. And here's the expiration. So you can pick an expiration. Normally with like something as good as Apple, as big as Apple, that has a lot of fluidity. Liquidation. You have weekly options, which is this W. In general, the stocks only have this monthly options in general. And then the strike price, aka the price the option is at. So for example, if you have a call and then your strike price is 125, that means if you buy a call at the strike price of 125, then you basically buy the rights to, but not the obligation to, buy 100 shares of this stock, Apple in this case, at the price of 125 each. And here's the call and put. You can switch between depending on your strategy. Here's a bid size and R size. Like bid size is how much people are willing to pay for it, and ask is how much the buyer wants you to get paid for it. In the end, you want to pick midway between the two, as close as possible. In many of the cases, but there's one case that I want to alert you is that if you want to get rid of the options ASAP, then you want to get as close as the ask price as possible. So it's like a negotiation, and you let the other negotiator take the upper hand. Here's the price type. There are 4 kinds. The market will set your price to the ask price directly, and the limit is the saver, and then you just enter a number that you're willing to pay for it. Let's say it's 1.02, which is the midpoint. You can adjust. Sometimes it might not go through. Then you can, if you want to go through faster, you just bias it towards the ask size. Let's say 1.03, then it will come through at a higher possibility. And this duration, just like when it's done, I haven't encountered much problems, but be careful. Make sure your orders is executed, and don't forget about it. And then of course it has commissions. So here's the simple way to do it. And This is the way I normally do it. So you go trading, and then power ETRADE. This launches you a more complete platform per se. So let's say I want to trade. Same goes for Apple. And then I want to do a call put. You can buy or sell. Know that when you sell a call, if you do not already own 100 shares of it, it's called selling naked calls, and the risk is very, very big. You might not even be allowed to do it without enough security clearance, I guess. And as you can see here, limit, you can automatically set your point, set your price to be the midpoint. If you want to bias a little bit, then it's easier for this to go through, but at the same time, you pay a little bit more. Sometimes it's worth it. It's a little bit. And if you just blindly do a market, then you would actually, if you blindly do a market, in this case, you would pay 108. Whereas if you do limit, you can pay 103. So $5 save without much work. Again, it's a negotiation here. And buy and sell, put and call. And here's what I want to show you guys is the snapshot analysis, which just tells you the risk profile and at what price of the stock you will make money and what price you would lose money, and it gives you a probability. So, for example, you bought a call at 125, for example, then Apple stocks could theoretically go to infinity. But you know that would never happen, realistically. And then the max loss is the money you would ever possibly lose. Let's say you forget to close it, then or the price drops below to a certain point at the expiration, then you will lose this much money at most. Here's the break even. You can see there are two lines here. One is a little bit more curvy. The other one is sharper. The curvy one is the current time. And the sharp one is at expiration day. So you can see the intersection point at expiration day is like when the underlying stock price is like 126-ish. While the break-even point for at this time, the underlying stock price is 125. And you have 28.34% of breaking even. Here's the part I like a lot. Sometimes you see the option, they have like June 21, that means June of 2021, but it doesn't tell you which day. But this expiration tells you which day exactly. And then if you forget about earnings coming, there's a note here as well, so you can make a decision accordingly, because before earnings there tend to be more volatility and people tend to bet against one way or the other way, etc. So be very careful. And dividends, some stocks have dividends, and that would affect some market performance as well, market behavior I should say. And you just do the same, and then you send. I'm gonna send it, and then if it executed through, you will see you can either modify it by adjusting the stock price, or you can, if it will either be killed, failed, or cancelled. Now we just canceled it. You don't have it. And the way to close the option, for example, I have a cover call here, and I just do a close, because a cover call is selling a call. So I want to buy this call back and close it. And that's it. That's how I do trade options, puts and calls and puts, namely. Thanks for watching, and drop a comment if you have questions. Thank you.